Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. It's Friday, August 19th, 2022. Lovely day yesterday with the family for celebrating the wife's birthday. Equity futures in the red, slowing growth, persistent inflation, and perhaps the notion that the Fed is not pivoting anytime soon, maybe driving the narrative today. I continue to see the dollar as a tell in terms of interest rates. Dollar's headed higher. It feels like it wants to break out to new highs versus the other, when you look at the Dixie or you look at the UUP versus other major currencies. I think it's reflective of interest rates moving up, which they are. Also the Fed not being done, which they're probably not. So that is a big headwind regardless. Crude oil down over 1.5% as the positive COVID tests in China really surge. First getting numbers that they haven't seen in quite a while. And as you know, there's zero COVID policy, which is working great. They'll just keep shutting stuff down. And in terms of commodities, you've got copper and the ags are really the only green commodities out there. Gold isn't down that much. A sad gold is actually not that sad. I was surprised. So maybe that's trying to catch a bid in the face of a resurging dollar, which would be really interesting. We may re-enter. We are totally out of gold. We did own the JDXJ. We did own AEM. We may re-enter one or both of those in the near term, depending on the action of gold, depending on what happens reflective or in response to Forex moves and what have you. But showing a little resiliency here. Also, in terms of if you're looking for a play like that, you can look at if you want to play, more than one metal at once. Freeport, if you're looking at copper, they also do have some gold mining that they do, so that you kind of get a double benefit there in terms of exposure with Freeport McMoran. On Wednesday, we pointed out the Norsk Hydro aluminum plant shutting down for September in Europe due to the high energy prices. We kind of talked about that a while ago as part of our reason for long some of these metals. And on that day, on Wednesday, Alcoa AA was down 3%. It was a down day in the market, so we bought more on that Wednesday. Yesterday's stock was up 3.5%. I think it's one of those things where you got to be aware how much the algos and the machines are driving the trading these days. I'd argue that there are more inefficiencies in the market because of the computers and what they're doing. They just really follow pricing action, so they don't think 2, 3, 4 derivatives down the road for given names. So I don't know, just pay attention, and if you've got a thesis and all your boxes are checking out, take advantage of the inefficiency you see out there, long or short. Keep your eyes on the executors in this market in terms of earnings events. So some of the names that have done just there's been exceptionally strong quarters put up by several companies, a lot of them in tech land. I'll mention a few of them here real quick. The Trade Desk, TTD, Wolf, semiconductor company, Wolf, WOLF. Key Insight, Keys, KEYS, Bill.com, BILL. That was just last night. That thing's up pretty big this morning. Supermicro Computer, SMCI, small cap. Air Test, AEHR, another small cap. OnSemi, ON. So I mentioned Airtest, onsemi, and Wolf. All three of those have ties in silicon carbide. Silicon carbide looks like it's really starting to catch fire in terms of semiconductor production. Wolf Speed is the name of that Wolf semi that I keep calling. That nice, huge gap up yesterday. Stock was up gigantic. Might be worth buying on a pullback, but I certainly wouldn't. I would give it a little time. But yeah, I mean, I think those executors can really hold the key to second half results, second half performance. They're really standing out, and you got like the trade desk. They just unequivocally said that their customers are just super engaged with them on a go-forward basis, looking out into 2023. Some companies just really doing it well out there. The VIX, watch for the VIX to break out of its down channel. So you've got this downward forming price channel in the VIX, just like you do in crude oil actually. But the VIX may break out of that down channel in the next few days. I kind of have a suspicion. So watch for that as an indicator that the market could be heading incrementally lower. Keep your eye on the dollar. I've said it. I'm saying it. I said it at the beginning of this podcast. I'm saying it again right now. I really think that is the key to what's going on and where rates are headed, and potentially thus where risk assets are headed. We got up another 50 bips today on the UUP. Had a really strong day yesterday. I don't see why this thing doesn't break out to new relative highs, which is not great for the rest of the market in terms of what it foretells, in my opinion. And that's it. That's all I got. Be careful out there. Hopefully you've taken some of the crappy stuff off the sheets. You got the quality stuff. I've definitely got my share of tech out there. I'm not giving up on everything. I've got my cybersecurity plays and what have you. But yeah, I think it's time to be careful again. If you're long vol, be long your vol. If you do some relative shorts in terms of inverse ETFs or short indexes or whatever, I think this is part of that time. Have an awesome weekend. We will see you on Monday.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.